Good day, crypto trader. Bitcoin price levels up for a 13.5% move amid dwindling exchange balance. Bitcoin price has struggled to find a solid footing during this crypto winter. Support above $24,000 is becoming elusive amid frequent pullbacks. However, its overall technical picture points to a smooth ride to $28,000. Bitcoin price will need support from micro and fundamental factors to keep the uptrend intact. Bitcoin price regains momentum. Bitcoin price is hunting for a way out of the bear market, and one sign it is having some success is the falling amount of BTCs on exchanges. On-chain data by Glassnode elucidates an exchange balance currently around 2,377,195 BTC, down from 2,652,488 BTC on January 1, 2022. Usually, a consistent drop in this metric suggests that investors prefer their coins in other wallets rather than on exchanges where they are more likely to be poised to sell them. It shows that prices will eventually turn around, which is a positive indicator for Bitcoin price. The moving average convergence divergence, MACD, on the 12-hour chart has reinforced the Bitcoin price move above $24,000. Traders can squeeze in more gains as long as the bullish divergence formed by the 12-day exponential moving average, EMA, and the 26-day EMA stays in place. A break above the 200-day simple moving average, SMA, at $25,257 will likely weaken the bears more, eliciting the fear of missing out, FOMO. If most of the buyers waiting on the sidelines heed the above buy signal, a breakout to $28,000 will be a matter of when. It will be safer to book early profits at $25,257 if the uncertainty of the bear market is considered. However, bullish traders could wait till $26,000, which is an inflection point likely to determine the approach to $28,000. On the flip side, a hefty buyer congestion zone is expected at $24,000. The ascending trend line will come in handy if declines soar. Fortifying this support is the 50-day SMA on the same 12-hour chart. Bitcoin price will likely settle for the path with the least resistance, and according to Into the Blocks IA map on-chain model, that's the one heading north. The chart below reveals the presence of minor seller concentration areas to $28,000. On the contrary, robust support zones are in line to cushion Bitcoin price from plunging below $24,000. Why Polygon's Matic inability to break above $1 is a canary in the coal mine. Polygon, Matic, price is set to undergo another rejection at the 96 cents historic pivotal level identified on July 20, 2021. With a possible rejection in the making, it could become clear that a breakout is not for now as investors start to rethink and second-guess what the Fed will do after several officials came out warning markets that they are far from done hiking 75 BP and more. This could pour some cold water on the hot crypto rally thus far. Matic price set to drop back to 80 cents. Polygon price looks to be in doubt where to go next after Wednesday's euphoria, when investors jumped the gun on their buy orders as they started to believe the drop in inflation numbers was the first of many more to come. Markets remained ignorant of the warnings of Fed officials in the aftermath, who said they didn't have any plans to slow down policy tightening, and kept pumping up price action in equities and cryptocurrencies. As the dust settles today, the warnings of these Fed officials now looks to have taken over sentiment as equity markets are mixed during the European session, and Fed futures are already creeping back up towards pricing in a 60 BP hike instead of 50 BP as they did on Wednesday, after the release. Matic price could put further pressure on 96 cents and is likely to get another rejection, as has been the case throughout July, where not one body of a daily candle was able to close or open above 96 cents. Expect a fade towards 85 cents, the low of last week, and then a dip back to 80 cents at the monthly pivot. With the backbone of the green ascending trend line and the 55-day simple moving average, for now, still, alongside it, bulls will be present to start buying into the price action. Upside potential, of course, could still be present if traders put aside the remarks of Fed officials, given it is still 40 days until the next Fed meeting and rate decision. So still plenty of days left to rally, and would need to be confirmed with at least a daily close above 96 cents and preferably even above $1. From there, Matic price could rally another 10% towards $1.10, where the 200-day SMA will be trading as a cap. Is Tezos price action set to flip 180 degrees north? Tezos, XTZ, price is bouncing on the euphoria of Wednesday when US CPI dropped below estimates and came out lower than expected, which for once means good news. It suggests that households will see their living costs stabilizing a bit after a steep decline lasting 6 months. Although this number is very supportive and has seen XTZ price rally 8% thus far, one dovish Fed member said that the bank is not done with raising rates at all and still needs to keep hiking them at an excruciating pace, which could spell trouble ahead for cryptocurrency traders if they do not watch out. XTZ price rally to be handled with care. Tezos price is set to test and break above the monthly R1 resistance level at $1.96 despite already receiving a small rejection this morning. The level is becoming quite a hurdle for bulls, who were not able to break above it on August 8. The risk is that the R1 resistance could turn into a double top, capping price for the foreseeable future. Additionally, traders in any segment of the markets need to keep in mind the warnings that several Fed members issued afterward regarding what the Fed will do next. XTZ price rallied on the back of downgraded rate hike expectations, with the next meeting in September only expected to yield a 50 BP rather than 75 BP rise. This opened the door for investors to jump on risk on assets. Hours after the CPI print, however, a handful of Fed officials all came out in sync saying that the Fed is not done, with even a very dovish member repeating the same message. That counts as a big signal on the horizon that the rally in XTZ price might only reach $2.25 and then fall back once the Fed confirms it will still hike by 75 BP, higher than current expectations. With this limited upside scenario in mind, a simple technical rejection has already been mentioned in the case of a double top forming against the monthly R1. In a bearish scenario, a fade could unfold, and, should price action break below the low of Wednesday, traders should expect to see a drop back to the monthly pivot in search of support. This might be found at around $1.64, or from the 55-day simple moving average at $1.60. Yes, Merge is bullish for Ethereum Classic price, but do you know when to get out? Ethereum Classic price is trading extremely volatile and bullish at the moment due to the upcoming Ethereum upgrade, Merge. In this article, we will take a closer look at the ramifications of Merge and the effects of its proposed migration from Proof of Work, POW, to Proof of Stake, POS. Ethereum vs Ethereum Classic. First, a quick recap on the difference between Ethereum and Ethereum Classic. A hard fork back in 2016 led to the splitting of ETH into two distinct assets, Ethereum, ETH, and Ethereum Classic, etc. The main difference between the two is that etc. is a speculative digital asset with a fixed supply of 210,700,000. Whereas ETH is the more popular and accepted version that is widely traded, with no fixed supply. Another difference is that whilst ETH is planning a much publicized shift to POS from POW, in the merge, etc. intends to keep traditional mining on its own blockchain after Ethereum migrates to POS. Etc. price, before and after the urge to merge. So what can investors expect will happen to the Ethereum Classic price a few days before and after the big event that is the merge? Right now, the value is split between Ethereum main chain and Ethereum Classic, with traders looking to squeeze as much of the profits they can using the ETH-POW futures products listed on BitMEX and Poloniex. Before the merge implementation, the ETH chain will split into two chains, ETH1, POW, and ETH2, POS. So let's look at potential scenarios that could affect etc. holders. After the merge, investors will likely offload their ETH1 holdings and buy ETH2 since they believe that the POS will accrue a larger value despite the fork. Etc. holders could also do the same and move to ETH2 or, in a limited number of cases, ETH1. Miners, on the other hand, will be skewed to mining the most profitable chain. Due to the ongoing fight between Ethereum Foundation and mines, the miners will likely support ETH1. However, if the etc. price is high enough and mining is profitable, they could stick around with etc. Regardless of how you look at it, the Ethereum Classic price will likely take a massive hit. This is borne out by data from Grayscale, which offers etc. products, and has been offloading its holdings since March 2021. Grayscale has reduced its etc. exposure from roughly $12.45 million to $11.96 million, denoting a delta of 500,000. Ethereum Classic Price Technicals. How does etc. look from a technical perspective? What do the charts say about it all? Ethereum Classic Price has breached its falling wedge pattern and shows strong bullish momentum. The retracement between July 30th and August 2nd only pushed it to $33.62, which is the midpoint of the 265% upswing witnessed between June 13th and July 25th. A further spike in bullish momentum could see etc. revisit and flip the range high at $52.72 after a 35% ascent. If this outlook persists, and it most likely will, the Ethereum Classic price could reach the double top formation at $77.33. This move would constitute a 97% ascent from the current position and is likely where etc. could form a local top, at least after collecting the liquidity. In conclusion, investors need to be prepared to experience massive spikes in volatility and potential drops in Ethereum Classic price a day or two before the merge, which is scheduled to occur on September 19th. One consideration that investors need to make is if their etc. investment is for short-term speculation or long-term. If it's the latter, then post-merge, the Ethereum Classic chain will likely accrue value, especially if the ETH1 chain fails to take off. In such a case, etc. has a bullish future, but it is too far into the future with too many variables to predict a probabilistic outcome, let alone a certain one.